Hey guys, and welcome to part 2 of my conversation with Ulash. And if you are moving to Dubai, like myself, I moved 18 months ago, you're probably going to bump into some questions in terms of actually, how do I protect myself and protect my family for the future when living in an area that you know nothing about? In our last chat, we covered stuff like tax, savings, the mistakes that people make when they first move to Dubai. But being really honest, right now, I'm not protected, nor is my family. So I picked up the phone and said, Ulash, can you join me in the studio? I've got a bunch of questions to ask. And he's been kind enough to join us. Ulash, how are you?
I'm good, mate. How are you?
Yeah, I'm good, thank you, mate. And I really did mean that opener as well. I was kind of in a position now where, as a family, we're kind of committed to staying here. We've sort of like fallen in love with the place. And then all the other life admin stuff like crops up. And it's actually straight off the back of Reggie at the weekend fell over, my youngest, cut his knee open. And that's just like one thing that we knew we had to get covered here, which was like medical insurance. And I'm like, what else have we not got covered? And that's when I reached out to you, because as it stands today, I know how it works in the UK. I know what my options are in terms of a will, income protection, life insurance and all that, but I have no idea how it operates out here. And that's what I want to try and unpack with you today.
Okay, so the interesting thing, Adam, is it doesn't actually work any differently. So the processes that you would go through, the facilitators, if you like, that you would use to set up a life insurance policy or medical cover, no different. But for some reason, when people come here to the UAE, whether that's Dubai, Abu Dhabi, or whatever emirate they've moved to, it's like I'm sure they've got it in their mind, but they just don't do it. They kind of forget it. And in many cases, given our day job, unfortunately, we hear the horror stories. So we'll get the phone call from the husband that says that unfortunately this has happened to my wife, or whatever it might be. And you kind of scratch your head thinking, you know, you had this back home. These are important things. Don't leave it. Don't wait for something to happen. Don't let that be the reason why you say to yourself, we now need to have A, B, and C in place, because 9 times out of 10, it's actually too late if you're dealing with it after it's happened. But in terms of how you go about setting it all up, you know, how would you save money? How would you invest money? How would you take out a life insurance policy? How do you arrange medical cover? It's no different to how you do it back home. How would you insure your car here? The same as you would do it back home. You're right. You pick up the phone and phone an insurance company, give them your car details and your details, and they give you a quote. It's no different. It's just a case of getting round to it.
Well, I think I can speak for myself at least. What's happened my side is with Sarah, she's like, we're moving here. She was ready to stay here from day 2. She was like, burn the bridges. We're never going back to the UK. I've classed this as like a 2-year adventure. And if it works, then we might extend it. So I think I've just like deferred all the decisions, thinking we'll only be here for 2 years. We'll go back to the UK, but we're now committed. So I'm at a point now where I'm like, okay, what do I need to get in place? You just mentioned sort of like people can do A, B, and C. Can you just start with like the brilliant basics of, for someone watching this, they may have never even considered any form of like future planning. What are the brilliant basics that someone needs in place when they're thinking about actually protecting themselves in the future? Okay,
so good question. I would say to cover all aspects of financial planning, your starting point has got to be, whilst thinking about the future, it's got to be protecting what's in place today. That's your foundation. So something as simple as what back in the UK we might call life insurance or protection. Being absolutely frank and open, Adam, to arrange a life insurance policy for somebody here in the UAE, the bureaucracy and the red tape, and actually having, as a life insurance broker, that's not what I am, but I work with life insurance brokers, for the purpose of almost controlling your income being controlled by somebody's health. A bizarre thing to say. So you can spend a lot of time and energy putting together an application, and I could spend 3 hours with you and then weeks processing an application. You go for a medical, and you know, because you drink 8 pints of beer every night and eat McDonald's 5 times a week, you fail your medical. The application's rejected, so the business doesn't go through, it's not processed. So it's actually quite a difficult thing for brokers to arrange here in the UAE. They're very, very strict about it. Probably one of the reasons why it's quite expensive in comparison to the UK. But to answer your question, the basics, I think you've got to look at protecting what's in place already. You, your family, whether it's the wife or the husband that's the breadwinner, it's irrelevant. You know, if you have children, if you've got a house that has a mortgage, for example, you need to make sure, and it's really important, you need to make sure that if something happens, God forbid, that the people that you care about and you love are protected. And you can do that very easily with a life insurance policy, a protection policy. Again, we hear all too often the stories when it's far too late. And something that's really important, especially for people that are moving from countries like Western Europe, the UK, America, Australia. I mention those countries in particular because expats that move here from these countries who already have existing life insurance policies back home, and I think we touched on this briefly in the previous chat that we had, I'd say probably around 50% of the time when we look at their policies or we ask the individual to speak to the underwriter, they're actually not covered as being a non-resident. So we've had a situation, actually we had many situations where we'll speak to an individual that could have been here for 5-10 years and they believe they've got £1 million or £2 million worth of cover back home, and they've been paying a very expensive premium every month. For 5-6 years they've been living outside of the UK, to find out that they were never covered the moment they left the UK.
On that, because I can imagine right now there's a bunch of viewers going, that sounds like me. How does someone very quickly check if they are covered? Do you know, so a lot of people that are watching this channel are like in this process of considering relocating. How does someone very easily go, if I move to Dubai, does my policy cover me?
Okay, so my advice would be speak to whoever set the policy up for you or the underwriter, so whoever the insurance policy is held with, contact them. And I would also say request in writing. If they tell you you're covered whilst living in the UAE, request that in writing. Don't leave. Insurance by definition itself is insurance. Don't leave any grey areas. Just make sure you're totally covered. So again, if something does happen, your family or whoever it is that you're protecting won't have any issues.
You just mentioned that the price here for like life insurance is potentially considerably more than in the UK. Is there a benefit to getting it in place in the UK with something written and confirmed that it is covered if you live in the UAE, getting it done that side of the water before you relocate? Or is there any benefit to coming here and then setting up a new policy? How would you advise people to think about that?
Okay, so if you're able to find an advisor or a brokerage in the UK that can set you up a policy and you're totally satisfied that it does indeed cover you whilst you're non-resident in the UK and specifically in the country that you've chosen to live in this case in the UAE, then actually it would make sense to do that. One of the reasons, certainly for ourselves, I would say that the price comparison would work out to be slightly more expensive is it's the companies that we use. We use the largest underwriters, so companies like Zurich, for example, or French Provident International, based out of the Isle of Man, UK legislation, fully international policies that pay out. They don't look for reasons not to pay out. So it's the other thing with insurance you've got to be careful about. It's not just a case of going for the cheapest policy, because some of these underwriters, and that's how insurance companies make their money. They want to receive premiums, they don't want to pay out. So you've got to look at the payout ratio as well, again, for the purpose of making sure you've protected the people or the things that you want to protect.
Yeah, 100%. You've taken the policy out for a comfort blanket, knowing you've got peace of mind if something happens.
Correct.
You want to know that's like belt and braces.
Yeah.
You just mentioned life insurance, and then you mentioned sort of protection.
Yeah.
What did you mean by protection?
Okay, so they're essentially the same thing, but generally in the West we use the term life insurance. Here in the Middle East they use the term protection, but under the term protection they add in things like CIC, critical illness cover, or TPD, which is total and permanent disability. So those are separate to life insurance. Life insurance is really simple. You insure yourself for a specific sum, and God forbid if something happens, that sum pays out to whoever you've nominated as your beneficiary. Really simple. Critical illness doesn't have to be linked to life insurance. You can have a kick policy by itself, and you might do that if you go out on the weekend riding a motorbike, or if you're into sports, or even if you go into a brunch and you always end up on the tables dancing, something happens and you're out of work for a while, who covers your income? Where does that money come from? TPD, total and permanent disability. Again, if you're playing football, you're in a gym, if something serious happens and you're wheelchair bound, you can't walk, where does the money come from? And coming back to what you said about delaying for a period of time because you don't really know what's happening, we never know what's going to happen in the future, actually. And that's the importance of making sure there's a plan in place to cover those unforeseens. And Adam, I'll go as far as to say to assume nothing will happen is quite naive actually, because we all know people that things have happened to, personal friends, family members. Life happens. It happens on a daily basis.
100%.
So I think it's to answer your first question, I think it's really important to start with the basics when it comes to financial planning. Look after and protect what's already in place, and then think about how do we build from that point onwards.
So help me build that out, and please speak to me like you're speaking to a Labrador to keep it super simple. So I understand life insurance as a policy and the benefits of that. What else do I need to be considering as like other ways to protect myself, all the way through to the thing that's top of mind for me is a will. This sounds crazy.
Yeah.
I've never had a will in the UK. I don't have a will here. But we're at a point now where I'm like, that feels idiotic from my side not to have this in place. And there's like stuff in accounts that my wife has no idea from. Not that I'm keeping it from you, honey. But it's like, she wouldn't have a clue that there's like, I don't know, a few quid in that account, a few quid in that account, a few quid in that crypto thing. She wouldn't have a clue. So can you just talk me through, if you were sat with me going, cool, Adam, you're clearly uneducated in this space. I'm going to end this conversation with you to give you some advice on what you need to go and do to protect myself right now, protect what's in front of me. And then a bit of future planning to go, here's the stuff that you need to have in place, just so if the worst is to happen, your belt and braces covered, and my family, my wife, my boys are looked after. How would you help me structure that thinking?
Okay, so I'll come on to the wills in a moment, but in terms of just making sure that everything's as simplified as it can be at home, it's as basic, Adam, as having a folder. So you and your wife, everything's noted down. So we have a bank account with these banks. I have a pension with this pension provider. I have an investment with this platform. Values and things like that, irrelevant really.
Yeah.
Just as long as everything's listed as to where all your assets are held or how they're held. So you've got access to that list. Your wife has got access to that list, and you might want to know that your father, your brother, or some other people that you know and trust, God forbid in the event of joint death, also know or have copies of that.
Oh, I didn't even consider
so
that.
That's your starting point.
Yeah.
That's keeping it as simple as possible.
Yeah.
Literally written down at home. Then how do you deal with the legal side of it? Are you familiar with what happens if you don't have a will in place?
Not a clue.
Okay, so you go through a process called probate typically.
Oh, sorry.
Which is
did
where...
know that word.
Okay, so probate generally is a lengthy and costly process. Most people, if they could, they would avoid probate. You avoid probate by having a will, simple as that. And it saves a lot of money.
And just,
Again,
sorry, just on that, is probate when there is no will and you basically have to bring in a third party to try and, for everyone that's trying to claim some of the assets or sort of a portion of them, that process of probate is a third party coming in and splitting everything out.
Exactly that.
Okay.
Yeah. So it's just trying to make sure that all the parties involved are now in agreement as to what will happen to the estate, who gets what, where does it go, and death, believe it or not, regardless how close family members are, again, in our industry, we see this a lot. When there's an estate that's being divided amongst siblings, things often do change. You'd be quite surprised. So probate, because of things changing and people not necessarily agreeing on what the result may be, means it's a lengthy process. And lawyers, as you know, generally charge
for time.
Absolutely.
Yep.
So you can avoid probate by having a will. Again, we open this conversation, how would you set things up? No different here in the UAE to how you would set up a will in the UK. Some people will talk about an international will. It will definitely hold some ground and allow a conversation to happen. If you want everything to be black and white and really, really simple, again, like insurance and protection, have no grey area, to make sure that the people that are having to deal with this are not having to run around like headless chicken and spend lots of money and have reports in different languages because you're living here, for example, I would suggest having a notarized will in each country where you hold an asset. Okay. So if we go back to the UK, for example, do you need a will writer? No, you don't. Absolutely not. So you can now online via a government portal, you can register a will for around £150. Really, really simple. If you don't want to do it yourself and you want to use a high street lawyer or notary and pay them a little bit more money, by all means you can do that.
What's the benefit? Is it just they'll know the questions and you may have some blind spots that you're not considering?
Yes, their experience may open up some other areas of your life, but generally there are templates online. So you can do it yourself. That's the reality.
I can see myself going to ChatGPT later and going, help me.
You can do it yourself. It's very, very simple.
Yep.
As I say, there are templates. They itemize everything. There are prompts to think about other areas of your life, not just your assets, your physical assets, your tangible assets, but things that you care about more. You should care about more, like your children, for example. Again, in the event of joint death, who gets custody, what happens there. So no different here. Here in the UAE, the Abu Dhabi and Dubai is slightly different actually in how it works, but you can now as an expat. It changed about 3 or 4 years ago, maybe a little bit longer. So you can now go to, in Dubai, you can go to DIFC, or you can go to the Dubai courts and set up your own will. Again, like the UK, you can use a notary, a lawyer firm to do this for you. They'll charge you a fee. They'll hate me for saying this. They're not required. You can do it yourself. If you want to use them, and if you see a benefit in what they tell you the benefits are in using their services, then by all means do that. If you do it via Dubai courts, you pay around 1,500 dirhams, around 300 English pounds, a little bit more. And if you have a Dubai court will, the same as the ADJD, the Abu Dhabi Judiciary Department, so Abu Dhabi court will, the difference there in some cases, in the event of death, they might still suggest or might want you to use a lawyer to execute the will, which would then mean having to pay a lawyer for their time and their fees. So that's the same as the Dubai court. With DIFC, my understanding is it's black and white. Whatever's in there, which you can update and change, obviously, as your circumstances change, but that's black and white. Whatever's in there, you wouldn't need a third-party lawyer or anybody to help execute that. That's what they will go by. That costs around 10 to 15,000 dirhams, which is quite expensive. But again, with the lower priced will, having the requirement to have a lawyer execute that in a court, if the worst happened in the future, they're not gonna give you their time for 1,000, 2,000 dirhams. It's probably going to cost you 8 to 10,000 dirhams. So I think you'll end up in the same place financially.
Fair.
So I would advise in Dubai, do it via DIFC. In Abu Dhabi, do it via ADGM.
Let me rewind slightly when you said, actually, if you've got UK assets, get a UK will, and if you've got assets here, would they be two completely separate documents or one document that references each asset class in the UK and in Dubai? So, or would I end up with two wills, one in the UK because I've got like a family home in the UK and bits like that, and then when we buy here, I'll have assets here. Are they two completely separate wills that are not coupled together?
Correct. Okay. They would be. And the reason that they would be is, again, some people here in the UAE, some notaries will tell you that a will here can include your UK assets, but the courts here and vice versa have no jurisdiction over UK legislation. So if you've got a will here and you have assets in the UK, certainly going through the courts in the UK, they'll look at that and they may even take it into consideration, but you'll then be going through a court process that you wouldn't have to go through if you had your UK assets under a UK will anyway. So I don't think it's going to save any money or time including them. So I would say, again, keeping it really black and white, keeping it really simple, have them as two total separate entities, listing the assets that are specifically in the countries where that will is written.
Perfect. Crystal clear from my side. It's amazing what you can learn in 10 minutes, isn't it? Thank you. Let me just shift gears slightly. So people watching this may have a pension in the UK. How does that work in terms of like transferring, or what are the options here for people in the UK that have a pension and are thinking, actually, I don't want to keep putting some money away for my retirement? What are the options?
Okay, so this is, the options are actually significant when we talk about the UAE and the UK. And I say this with a big smile on my face, Adam, because I've facilitated the switch or the transfer of hundreds of UK pensions simply because of the terms between the tax treaty between the UAE and the UK and a couple of other GCC countries actually. And the terms of that tax treaty are very favourable for residents of the UAE. So let me explain that in a little bit of detail. So some UK derived income, regardless of the terms of the tax treaty, are taxable in the UK. For some you can't do anything about it. For some reason, pension income is taxable depending on where the member is tax resident, where he resides. So in the UAE at the moment, income tax is zero. So if you start taking income from a legitimate pension structure in the UK, you can draw all of that income totally tax exempt whilst living in the UAE. There are some caveats.
Okay.
You would need to be non-resident for 5 years. That 5-year clock starts from when you leave the UK, not from when you make your withdrawal, if that makes sense.
Yep.
Okay. The other caveat is if it's a SIP, you need to be 55 years old or over, which changes to 57 in 2028. But if you have a UK pension and you're living here in the UAE and you are today 55 years or older, and you've been out the UK for at least 5 years, or you believe you will be outside of the UK for 5 years, you'll be able to draw 100% of that pension totally tax exempt. So massive benefit of having a UK pension whilst living here in the UAE.
What if you're 35, 40 years old, still paying into a pension? How does that factor in when you are working here? Like where should you home or house your pension in that situation?
Okay, so once you've been a non-UK resident for 12 months,
Yep.
you can't pay non-tax relieved funds into a UK pension. And just whilst I'm on that point, you also can no longer pay into an ISA back in the UK. A lot of people still do, but you're not supposed to. Very difficult for them to police that. I can see in your face that you're thinking I'm still doing that.
Still doing that, and I was actually talking to my mate about it literally last week.
Okay.
Yeah.
So you can't pay non-tax relieved funds into a bona fide UK pension structure. So if you've got a UK pension and you're not 55 yet and you're living here, for example, or anywhere else in the world actually, so I would say don't pay any more monies into that scheme because you don't know if you'll be here when you're 57. So you might not be able to receive the benefit of the tax treaty between the two countries. But what I would say is stop paying into that and then set something up that's offshore, Isle of Man, Guernsey or Jersey, that whilst you are living here will grow tax-free, and if you never return back to the UK is never taxable at source anyway. So don't increase the potential to have a pot of cash that can be taxed because you don't know clearly where you'll be at that stage in the future.
That makes sense. Is there any complications in terms of setting those offshore pensions? Or is that as simple as, like you say, picking up the phone, going online and just making sure that that company resides in one of those tax-free jurisdictions?
Yep. Exactly the same as how you would set up any type of pension or investment scheme back home. You would either go online and do it yourself for a platform, or you'd pick up the phone to a financial advisor and say, hey, I don't have enough money saved for the future. I need a retirement plan, or I've got X amount of cash I want to lock away for 10 years and I want it to be tax efficient. What are my options?
Fair.
It's as easy as that.
One of the things that is sort of ringing in my ear slightly is the fact it's taken me 18 months to consider it. And I know that most people, I'm generalizing, but sort of the 22 to 40-year-old, they sort of like go, I'll sort that out later on. What's your advice to people of like when to set things like this up, when to start taking this seriously and having these, I guess, more grown-up decisions that you have to make? Because it does just feel like money out your pocket, and you go, actually, everything will be okay. I'll put this money to work for a little bit longer, make some more money off this money, then I'll start to protect myself. Like, just bring that to life to me a little bit from your experience into like, what are the mistakes that people make and when should people really be taking action around this?
Okay, so youngsters generally are not thinking about the future. We just don't. We've all been there. So it's a real interesting question. I've done these statistics on this. I've actually gone through our client base and I've looked at to the average age of the average client that approaches us, so a new client, and the average age is 42. So somebody new that approaches our company and says, hey, I've just started to think about my retirement or protecting my family, whatever it might be. Typically it's a man, and typically they're aged 42. Once we go for a financial questionnaire and ask questions such as, when do you want to stop working, or when do you think you'll receive your final pay slip? Generally it's around 60 or 65 is what the average person is working to. When we then find out or ask a question of what income would you need every month for you to be able to stop working, when we do the calculation for their preferred income, from the average 42-year-old, I'd say it's around 85 or 87%, so nearly all of them actually, can no longer afford what they need to save monthly to achieve their preferred retirement income goal. And to answer your question, Adam, actually you answer that. Why do you think that is? Should they have left it until they were 42?
No, when you just actually done the maths there, it's okay. There's the benefits of compounding over time and putting it into a pot earlier to get you to that desired income out of the pot when you're later. In terms of like why I'm waiting or why I've waited, it just, I don't know, you just feel invincible at this age until stuff happens. And I guess I'm at this point now where, one, I know I'm moving, and two, there's just things going on with friends' health and bits like that. And I think as you grow up, you start to become a little bit more sensitive to things going wrong in other people's lives. Yep. And maybe that's what happens with everybody else. They kind of get to about 40 years old and they go, actually, I'm seeing it around me. I need to protect myself.
Yep.
But
so again, it comes back to what we said earlier, that we often wait for something to happen, that trigger, rather than use logic and sense. And let me ask you a question, Adam. If your children say to you, Daddy, I've just started my first job. They're 22, whether they went to university, whatever, irrelevant. But let's say they just started their first job and they've been there for a few months. They're really happy. They're really comfortable. And they've now got 3 or 4 months paychecks coming in. And they say, Daddy, I'm really, really happy. Look how much money I'm earning. I want to think about my future. Should I start saving now, or should I start saving when I'm 40 or 50? What would you say to your children?
All right, you've tied me up in knots here. Well, my eldest right now, Riley, he's already at a point where he's buying sweets on Kareem, breaking them down in bulk, taking them to local park and selling. And we've basically got a deal that 20% of his profit goes into his savings. The rest of it goes into inventory for him to keep turning money over and to grow the business. But he has to save already. And one of the most happiest moments I've had in the last few weeks is when Riley came to me off his own bat and was like, what's compounding mean? And I was like, here we go. He's paying attention and he's learning. So to answer your question directly, I would say start saving immediately, just because of the benefits of compounding as well. Like every single year, your money is working for you. And it also just, you've helped me answer the own question, but it just gets into the habit as well of looking after yourself first and sort of putting that nest egg away. And he's 11 years old. So it's one of those ones where it's like, I know the advice to give, but I don't know why it's hard to do yourself though. What are the blockers that you see people bump into as to like the 26-year-old watching this right now that might have a family, might have a young family? Why is that person, in your experience, not taking the action now? When if you take the action at 26, 30, to have the extra 12, 15 years on that person that you just spoke about, or that average age of 42, what are the blockers that people are bumping into and saying, I'll do this later on?
I often ask a question to people, why delay? Why haven't you done anything so far? Whether there's a real blocker or not, I don't know if it's just a kind of trend. So if you think about it, when a 25-year-old is socializing with other 25-year-olds, they're probably, although things are changing, but they're probably not really talking about pensions or what if I get cancer, what if I have an accident. They're talking about their careers, their jobs, possibly getting married, getting engaged, possibly buying their first car that they've with some savings, or a deposit for a house. I don't really know if there's a definitive answer to this, but for whatever reason, generally people leave it until it's a little bit too late to seriously start thinking about it. And you really notice it in places like the UAE and again throughout the GCC, because people generally have higher salaries here. Their disposable income tends to be higher than not paying taxes. So they should be able to save more. But they don't. They don't think about the portion that I would have been paying in tax back home, taking whether it's 15 or 20% of their salary every month and saying, right, I'm going to save that. And whether that's under the bed in a jar or in a bank account, but they should be doing something with it for a number of reasons. We need money in the future. And actually, none of us know how long the journey in the Middle East will be. And again, we see this in our job. You can talk to somebody today and they'll contact us tomorrow and say, unfortunately, I lost my job and I can't get another job, or there's too much competition now and loads of people are coming over and accepting lower salaries. I've had enough. I'm moving back home. So we've got to plan for it. But why they don't think about it, I don't actually know, Adam. I don't think there's a specific reason. I just don't think it's ingrained in us from a young age. But coming back to the story you were telling me about your son, I think a big part of this is down to the fact that financial literacy doesn't exist in schools.
Correct.
I think that's a massive part of it. Well, we don't spend any time teaching something that I think is so important for people to set themselves up in life, and the importance of understanding money, understanding how, use the word compounding. Compounding can't work without time. The most crucial aspect to giving yourself a big pot of cash in the future, and I say it hundreds of times like a broken record in the office, is maximising the time available to yourself. And so I'm talking about it with my children. I do diagrams with them. I talk about saving, talk about investing, and they'll be doing that from a very, very young age, and hopefully they'll be in a much better position than I am when they're 55 or 60. So long-winded answer to your question, why don't people talk about it? It's just not ingrained. It's not in their heads. And we as parents have to take some responsibility. It's good that you're doing what you're doing with your son, but lots of parents aren't doing that. They just don't think about it.
I love the fact you've touched on like financial literacy, and I can't remember if I mentioned this on our first episode together, but the fact is, and I see it across all my friends when we were like 15 to 22, is we start earning some money, we start spending some money, we're then offered some credit, we then take some credit, we don't understand what a credit rating is, and from the age of like 18 to 22, you basically destroy your credit rating because you don't understand how finances work, and then you spend the next 3-4 years of your life trying to build your credit rating back up to give you the options you wish you had a little bit earlier. I think it's an absolute crime that kids just do not get taught how to manage money. And to come back to like the blocker, as you were talking, I think one of the things is just trust, and take this with the intent that it's meant. I just think majority of people, when they think about speaking to a financial advisor, they're just a lack of trust. That's why I love you guys. Reference guys, because Sean's still back there. You will have seen him on part 1. Most of you part of the video, his retention was solid. But you guys jumping on the mics and sharing advice, and this not being scripted and you just because you know your stuff, I think this doesn't happen often in this space. How are you finding has there been any change in quality of the people that have reached out to you off the back of this? Like, do you enjoy this sort of thing? And do you think the actual industry needs more people like you tackling these subjects in a more open way? Because it feels quite, I don't want to say cloak and dagger because that makes it sound really negative. It feels just like quite behind the curtain, and it's all sort of, I haven't got any advice until I speak to someone. When I speak to someone, it's going to cost me. I don't know what they're going to ask me. I don't know the questions. That's why I enjoy you guys coming here. What can the industry, let me get to a specific question here. What can the industry do better to actually make financial advice more accessible? Because I think that's one of the barriers at the moment, is it feels quite daunting going and speaking to a financial advisor. What, in your view, do you think the industry can do a better job of?
The industry has a big responsibility, and I believe that they should be held accountable more for the reasons that are probably the majority of the reasons why people might not reach out. So transparency is key. I've been in this industry for almost 15 years. In April, it'll be 15 years here in the UAE and 14 odd years back in the UK advising people on tax planning or investments in one form or another. So I've dealt with all the negativity. So for me, transparency is key, and I'm aware that that some people might hold back because, I mean, you can go on the internet and it's in your face all day long. The words bankers, financial advisors, there's generally a negative connotation. Mm-hmm. People don't trust them. We're still around. We are needed. For me, it's actually been quite easy to stand out from the crowd, because I said to myself, I'll tell you a little bit of an insight into how my mind works, Adam. When I was first introduced to the business and listening to people and looking at how people operate, and certainly here in the UAE, it was a little bit like the Wild West when I came here 15 years ago. And that may have not necessarily been the advisor's fault. It's locally, there were regulators, there were legislators, but they didn't really act on anything. They didn't really regulate anything. They kind of existed because I think they had to be there on paper. But things have changed a lot. But what I realised from many years ago, from a young age, is how can I stand out? How can I be very, very different? Because I can see what the problems are and where the issues arise from. So I actually said to myself, when I'm sat down with somebody, I can be unique or different just by being me. We can talk about the same structures and solutions and strategies and things we should do and shouldn't do for tax efficiency or how to grow your money, for example. But nobody else can be Ulas, and I can't be Steve or Bob, for example. So I just said to myself a very, very long time ago, I decided that when I'm sat down with somebody, and actually on the phone, whoever I'm having a conversation with, I said to myself in my head, be the person that you would want sat in front of your mum and dad. And that's just
I like that.
Honest person working with integrity. And they may not like what you tell them, and they might not choose to work with you. That's fine. That's how it works in all aspects of life. So I can't control that. What I can control is being absolutely transparent and working with integrity. I can't control the markets.
Absolutely love that.
So that is how I've stood out, and it's how I've built my client base on a personal level. And I think it's one of the reasons why all of my clients stay with me for a very, very long time. I've started to have clients, their children, some of their children who have now left school and they've got their first jobs. I'll get the mum or dad on the phone to say, hey, you've been looking after for some time. Stevie's just started working, and we've told him that he should think about this, as you've always told us it should happen from a young age. So I'm seeing that come through now. But it's still really, really tough. And there are still advisors, not just here in the UAE, not just in the UK, globally, who still do things, as far as I'm concerned, for the wrong reasons. And the other issue that we have with that, Adam, is people don't really go online to say, I've been working with this advisor for 10 years. He's grown my funds safely and securely, 10% a year. We chose a really cautious strategy, really happy. They tend to go online if there's a negative story, and that tars us all with the same brush. Actually, it's this company, so everyone that works at this company is bad. It's quite difficult to deal with that. But it's not stopped me from building what I've built with my client base over 15 years here in the UAE. But it is tough. So what needs to happen, I think the companies themselves need to take accountability and responsibility. And I think that the advisors who are genuinely good advisors, we can change this by just making sure that we all continue to do the right thing.
But because of the nature of the work that you do, is the lack of content and the lack of people joining mics, jumping on podcasts, videos, is it because there's like this risk of like saying something on the mics, maybe that someone isn't completely confident in what they're saying, and then it coming back to bite them? Because I guess it is very black and white sometimes in terms of the advice that you give. I think I'm just shocked at the lack of content online when it comes to financial advice. But maybe that's the reason, is because it's kind of like a doctor or a lawyer coming on and trying to give advice, and if one word is wrong, there's a reputation damage. And I'm paraphrasing for you here, but I'm guessing because you've been in the game so long, you just know your stuff, and it's like you're just confident to sit on the mics and answer any questions that I basically fire your way. Let me just shift gears slightly, if you don't mind, while we've got some time together. I've got some like fast fire stuff here that I want to make sure we get covered off. You said something around the death duty tax on US stocks. Can you unpack what that is? And for anyone that's watching this that has any US stocks in their portfolio, how that impacts them?
Okay, so as with all the points, this is another real interesting point, and we've seen a lot of people get caught with this. So if you are a non-US person, so what that means is if you don't have a US passport or citizenship or green card, for example, so you, myself, Sean included, if you hold direct US securities, such as the most obvious ones, your shares in companies like Microsoft, Google, Nvidia, Broadcom, Apple, Tesla, whatever it might be, if they are US securities, if they are held via something called an execution-only platform, so that it does include apps such as Interactive Brokers, or
IG Index, by any chance?
IG Index, Fidelity, Charles Schwab, all the obvious platforms. If your holdings in US securities, just that part, are in excess of $60,000, then in the event of death, your beneficiaries would have to pay US death duties to the US taxman.
How much is that?
It's up to 40% on each dollar in excess of $60,000. Mm-hmm. So depending on the value will determine whether you pay the higher rate or the lower rate of around 18%, but it could be up to 40%. So it's quite common for me to meet somebody here in the Middle East, particularly people that work for companies like Microsoft or Google or Amazon. They've been there for a long time, because part of their package typically includes some shares on an annual basis. So each January, for example, they might receive another $500,000 worth of shares, and even these people are unaware of what they're exposed to by holding these shares directly.
So how do you mitigate that? Is that moving them to a different platform that's housed in the UAE? Like, how does someone, straight question, how does someone avoid paying that tax?
It's as simple as you said. So you move them to a platform not here in the UAE. It would be typically a platform again in somewhere like the Isle of Man, Guernsey or Jersey, or some other mainland European countries, where it's held essentially in a structure that's not execution only. It's held in a structure that's where the trades, the contracts are held by a corporate entity, and you are the beneficiary of all of the holdings within that entity. So that's a little bit technical. I can try to break that down, but just to keep it really, really simple in layman's terms, you don't have to sell your shares. You just move them from structure A, where they are today, to structure B, and it's structure B that would give you immediate mitigation on US death duty taxes.
Why isn't everybody doing that then?
A lot of
just
people,
lack of knowledge.
Yes.
Okay.
Yeah. So the majority of people, once we talk about it and they do their research, they've got to be comfortable that problem exists. The majority will say, I need to do this immediately. Can you help me get it done?
I'm going to fire some fast fire stuff at you because I'm aware of the time and I appreciate your time, but there's some stuff I want to get on the record. Quick fire style wrap up here. What's the one thing that everyone that watches this video who is thinking about relocating from the UK to the UAE, what's the one and first thing that they should do?
Very good question. I think a lot of people are moving here for the wrong reason. So the one thing they should do is make sure that beyond the emotional reasons, socially the UK is a bit of a mess, make sure that financially, economically, it works.
Oh, I'm just doing my best not to follow up on these because there's a lot in there that we could unpack. What's the one common misconception that you want to clear up while we're on the mics today when it comes to whether it's financial advice, wills, future planning, in the world that you operate in? What's the biggest misconception that you see?
I think a lot of people perceive the process to be fearful or are scared because they may not understand or they believe they don't understand it, but it's very, very simple. Don't fear it. You've got to do it at some stage. So don't delay in 10, 15 years time because it's a steeper hill to climb, if that makes sense. So at some stage, you've got to deal with it. Just deal with it now. Stop putting it off.
Stop putting it off. Like that one. It's kind of like teasing me up for the next one, which is when you think about your clients that are having the most success, and maybe success is the wrong word, but what's the one habit that your clients have that you wish every single one of your clients had?
The clients who have had most success in building a portfolio, so growing their money safely and securely, are the clients who spend most time talking to me about it. So clients that interact the most, clients who don't make lots of changes, clients who understand the importance of maximising the time, choosing sensible funds in the beginning and letting time work its magic. Just keep feeding them and just leave it in the background.
Mate, you're made for fast fire, by the way. You are like crystal clear. So guys, the reason you're getting a hard cut and a piece of camera from me now is because we closed off this pod and then me, Ulash and Sean just carried on chatting and there was some gold here. And I think it's like the quality of the relationship that we've got just to have these honest conversations. So what you're going to see now is just the off the mic conversation that carried on after this episode.
That's really interesting. As I'm answering your questions, I'm going through this and it's all going through my head. It kind of just reiterates the craziness that we face in our job every day. It really does. Because I can say it a million times and you'll speak to somebody and you know, for us it's the same conversations because you've got to go through the same process. There has to be a foundation in place for us to end up in a position where we can say, based on the information that you've shared, this is what you need to do. Whether or not you do it, totally your decision. Whether you choose to work with us, whether you don't work with us or whatever. So we go through the same thing over and over again. It's really important, and I stress that with all of my team actually. But just to keep saying it and saying it in this environment is a little bit different to when I'm saying it to a client.
Why is that?
I don't know, but it just made me, as I'm saying these things, I'm just thinking about it again, and I just feel like saying, Ulash, there's a few clients that you need to go back to. Yeah. Let me jump in and ask you a question here, right? Do you need me and Sean to be sat here to say to you, think about this logically? You know the answer, and that's which why I'm doing it in a silly kind of playish way. If you want to have a pot of cash, whether that's in a pension or whether it's in property, divided in property, whatever assets. But if you want to have a good sized pot of cash in the future, without speaking to a financial advisor, how do you think is the best possible way of achieving that?
Can I be honest with you? By the way, these are still running, and I want to inject this in because there's something that's come up that I haven't even considered. For someone like me, who is an entrepreneur at heart, in my head, I say, I don't need this. I'm going to make enough money building businesses, getting liquidity, that I will make myself financially free in the sale of my assets in the future.
Okay.
That's what's going through my head. And I know how dumb that is.
No, but I hear that a lot. And I think for the younger generation, advisors of the future will hear that even more.
Yeah.
Because there's lots of different ways that youngsters can make money today outside of traditional jobs, if you like. Mm-hmm. Very, very different to what we were experiencing. So absolutely, you're quite right, and let's hope that that's the case, and let's hope that's the case for a lot of people. But if you do that and you're successful with your own plan that's in your head, and again, hopefully it works out that way, if that happens, plus you had a plan of saving a little bit of money alongside that, then what's the result of that? That you're going to end up with more money. Yeah,
it's not binary. So it's not A or B. I can put away, mitigate risk, and hopefully hit the moonshot, which I'm going for in life.
Correct. Yeah. It just means that the end result will be you'll be more comfortable. The legacy. But that's the irrational logic for your children will be bigger.
But that's the irrational logic that I've said. I remember actively. This is horrendous. I remember actively setting up a pension for my team in the UK and getting all that done when I first started my company, and I didn't put myself on it because I'm like, I don't need it. I'm just going to make enough money through building, selling, and doing my own stuff. I didn't want the safety blanket of a pension, and I thought that since I was 22 and set my own first business up, and it's only now that I'm starting to go, you know what, that's a bit dumb. That's just probably not the right way to think about stuff. As my wife would say, I'm so bright in some ways and so dumb in others.
It's interesting because you chose to protect those that were important to your business.
Yeah, but
if you know what I mean.
Yeah, but the reason that I protected those people is because they don't have an influence over the success of the business. They are employees of the business. I was like, you can't influence your own outcome. I can. So I'll go do my thing and I'm going to protect you.
But
it's weird.
It's a selfless thing.
Yeah.
Do you know what I mean?
100%.
You can call it a pension or whatever structure that someone decides to use. And as an advisor, to say to somebody, even if you're just saving money in the bank, taking business away from advisors, whatever somebody does, if they're receiving an income, whether that's through a traditional salary because you're an employee, whether it's because you're invoicing people because you run your own business, if you're not taking a portion of that money and doing something for the future, that's crazy to me. And that something might be you're just saving a deposit every time and buying a property. Whatever it might be, whether it's saving money in the bank, if you're not doing something with some of that money, because you can't guarantee that the income that you're receiving or how you're receiving this income today will be the same way that you receive your income in 2, 5, 10 years' time. So for those that have a traditional salary, a traditional job, if you like, and receive their money every month, if they're not taking a portion of that and paying themselves first, because let's be clear, your employer, if they had a problem with their shareholders or their board of directors, or they were late in paying their electricity bill or the lease on their commercial premises, that's where the money's going first. You'd be last. As an employee, you'd be last.
Yeah.
So when you receive that salary, if you're not taking a portion of that and paying yourself first, spend the rest of it. Go crazy with it. Absolutely. You've got to live as well.
Yeah. Pay your future self first.
Correct.
That's the thing that I just heard. Pay your future self first. Can we have a deal? I'm going to get my affairs in order. I'm going to work with you. Maybe yourself, Sean, as well. And then in 6 months' time, let's just jump back on the mics and I will just be super candid in terms of what I've done, how I've done it, how it's worked, what the process has been. And I'll come up to your studio. Yeah. That could be good fun. I'll come up to you guys and we can just talk through that as like a live case study. Yeah. So I think I'm at a point now where the reason I want to speak to you is not out of any other grandiose reason for the channel. It's there's stuff going on in my world and I need to sort it out. So let's just do this together.
Yeah.
Yeah. No different to anyone that we ever sit down with.
100%.
So everybody should be planning for the future. It's mad. Something I didn't mention on there is when we talk about the insurance side of it, and it's just coming to my head now because of what you said, Ulas, I need to do something. Again, you should do something. How you do it, totally down to you, fully respect that. But on the insurance side of it, you drove here today in a car that I'm 100% sure is insured.
I got a taxi, but yeah.
But
yeah.
better have insurance.
Yeah.
You've got a
100%.
house, you've got a car at home that you're.
Got a car, got it
insured.
insured. Yeah.
Do you have life insurance to protect your wife and your children?
No. But do you know why? Just to play devil's advocate, it's a legal requirement to have insurance on a car, and it's not to have life
It is,
insurance.
but the
That's a
things-
forcing function.
But the people that go in your car, you've got to care about them more than the car. You've got to.
Oh, I do.
100%.
I do, but I'm not
That is-
acting that way. And I
Correct,
think that's
yeah.
the really
So-
honest, candid way of looking at it. Is
I think for people that don't need life insurance, and again, maybe I should have said this, but the cameras are still rolling. For people that don't need life insurance, Adam, I would say the people that have got enough in value of assets or cash. So if you're a 50-year-old guy and you're married and you've got one or two children, if your house is paid for and your children have finished school, you could argue that if you had £1 million, dollars, whatever currency in cash in the bank account, you could argue that if something happened to you, there's probably enough for your wife to live the rest of her life. Now, that's not the case for most people. So for most people, it's a case of they've got to sit down, they've got to say, okay, I've got my life insurance, I've got my car insurance because I have to, it's a legal requirement. And tomorrow, actually, if the government here in the UAE or back home in the UK, if they said it's a legal requirement, we need to know that you're not relying on the government.
That's exactly what I
But
was.
if it's a legal requirement, you've got to insure your family. If your net worth is under a certain level, you would do it.
100%.
Okay. In the UK, your tax is deducted. You might moan about it, but it's deducted.
Yeah.
So deduct your future income.
Yeah, it's a fault. Yeah, it's a sad state. This is me talking to me that I'd need some form of like legal forcing function to take the action that I know I should be taking now. So I just need to get on with it. Do you know what's really interesting? This is coming full circle. I'm doing my run in January. I'm calling it a run, not a race. For Cliffy, he was a financial advisor, and and when I was 14 years old dating his daughter, I think he gave me what was it called? Who Moved My Cheese? Is that Who Moved My Cheese? I think it's I don't get me wrong. I was 14. I skim read it, but he was like, pay yourself first. He was like, pay yourself.
So you
first.
did have guidance. From
Had
your
guidance,
age.
but I was too young to care at that point. I was like, all right, where's your daughter? And now,
But again, you're not. No one's ever too old to start. But if someone says, when should I have started? The answer is always yesterday.
yeah, 100%.
And again, if you want life to be really comfortable, then you should give yourself as much time as possible. And I believe this actually to a degree that having a pot of cash does help with many problems and make lots of problems in life easier. Whether we like it or not, whether those are words that people want to hear, that's a fact of life, unfortunately.
Yeah, agree. Ulash, on that note, for people that are watching this and want to reach out to you, what's the best way that someone can follow up with you? Because on a personal note, and you probably weren't expecting me to share this, like I'll look down the lens as I say this, because on the way in, I was talking to Ulash about clients and how he's operating, and I know that some of the people have followed up with you off the back of this channel. To hear how you think about clients with not just your professional hat on, but morally, and how you engage clients, I have like the utmost respect for how you and Sean operate. So if someone wants to get some financial planning from yourself, or at least pick up the phone and have a conversation, what's the best way that they can reach out to you, mate?
They can contact me directly. And the easiest way to do that, Adam, is I'd hope that yourself and the guys that will put this video together for us can include my email address and my direct dial telephone number and Sean's details. And I'll also comment in the comment section, whether it's on Instagram, TikTok or LinkedIn, with my direct details. But if somebody wants to reach out and just have a conversation, whether there's business or not, totally irrelevant. I'm comfortable with my current business book. It puts me in a position where I can give advice and guidance for free. So if I can do that for somebody, I'll be more than happy to do that as well.
Amazing. I'll put everything in the description. Ulash, Sean, appreciate you guys. Thanks for your time today, mate.
Thank you. Good to see you again.